What's going on, guys? Hamilton here with the Trading Initiative, back with another trade idea. This is something that we have been thinking about inside of TTI for weeks, but we have not been able to pull the trigger because the charts had not given us the clear signal to go ahead and enter this. Well, now we're starting to get that signal. I want to share it with you. Yesterday, we opened up our first real position as a community in an energy short. I want to go ahead and lay the thesis and show you the exact position that we opened up. Hopefully, it will help you when you're looking for your own energy shorts or just understanding kind of the thought process that we go through. So first things first, I want you to notice XLE hanging out near all-time highs going back to June. This wasn't all-time highs. I want to point that out, but it was pretty close, right? We hit up in 2014 into all-time highs, but we've been hanging out around there, almost, higher than every other sector going back a year and a half. And so people were speculating that energy was going to keep breaking out into all-time highs. U.S. oil was going to go back up to $100+ a barrel, and it just never manifested itself. Go ahead and put in a pseudo triple top here, going back to January, coming out, trying to break out once again, and unfortunately, it was unable to. Focus on a few things here. Bearish divergence on the RSI, showing us that buying momentum is slowing, or was slowing, every single time that energy came up and tried to test this area once again above $92, $93. There was just very little enthusiasm from the bulls to go ahead and break this out. Bears were in complete control, and now we're starting to get a breakdown sub 200-day moving average. Nothing good happens below the 200-day moving average. To quote Paul Tudor Jones, one of the greatest traders of all time, if we're below the 200-day moving average, he would simply tell you, sell your position and play defense, not necessarily short. We're going to take it one step further and at least grab a little bit of short exposure in terms of energy, right? So this is one of the last sectors to roll over officially. Most of the other sectors, I should say, have already rolled over from their highs, going back to the 2020 pop-off. And if you know anything about what we like to do, we like to set the stage here utilizing the Wyckoff market model. Accumulation, right? You have a horizontal channel here of accumulation. You have your markup, which shows you an uptrend. You have a distribution, which is a horizontal channel where institutions, etc., are systematically selling off their shares. And what happens after the distribution? You have the markdown. Yes, you have a downtrend. We are currently targeting around that $60 area. The previous 2020 highs seems to have worked for us in other sectors. That's kind of been where we have focused most of our price targets as they break from their 2020 run up, if you will. And so we're going to go ahead and stick to that game plan, the 2020 highs, bearish divergence. We're closing below and now trading below the 200-day moving average. Also, a lack of volume, sub 75 down towards 60, gives this an opportunity to really hit the gas in a downtrend here. I'm not entirely sure if we're comfortable enough to say this is going to capitulate on a sector level, but everything here is screaming that there is a downtrend incoming and we want to grab it at the perfect opportunity, which for us was that 200 MA breakdown with the bearish divergence, etc. Also want to point out that there is a very strong correlation between XLE, specifically U.S. domestic energy companies, and the price of U.S. oil. As of right now, the price of U.S. oil is sub $70. Today is March 15th. It's 9 in the morning Eastern Standard Time, and we are trading sub 70 for the first time since December of 2021. This is a big deal. We are seeing weakness in U.S. oil prices, and we are seeing corresponding weakness in the XLE sector as well. Makes total sense. Now, some of this has to probably do with the financial area of the market blowing up right now. Not only U.S. domestic, but Europe is blowing up right now as of March 15th. Credit Suisse trading at all-time lows. So it's kind of brewing this perfect storm from a technical standpoint, though sub 200 with this potential markdown phase incoming. We want to take a piece of this. So we went and scanned. We've been scanning for multiple weeks. And I'm going to go ahead and show you one of the trades that we took as a group yesterday, this OVV play. Same sort of setup. It looks a lot like the XLE chart, and that's for a good reason. There are lots of different companies that are either trading near their all-time highs, XOM, Chevron, Exxon, etc. There's also a lot of small caps and mid caps that have already capitulated. We don't want to grab either of those. We want to grab names that give us clean risk on and risk off levels. And OVV is giving us a clean risk off level, somewhat like XLE, and we took advantage of it yesterday. So I want you to focus on where we were yesterday in terms of price, and I want you to focus on where we are in terms of the market cycle. We'll start with the market cycle. We have the accumulation, the markup, the distribution, and the potential markdown. I'm going to go ahead and use that 2020 high as a potential price target, so somewhere around 25 bucks. We have an incredibly bearish momentum regime going back to the end of last year, a 4.44 ADR, meaning that this thing is going to move. And as of yesterday, we got short on a bounce back up towards the original horizontal level break near 40 bucks. This is our BRB setup. This gives us the opportunity to grab awesome positions at cheaper prices, maximizing our potential reward while minimizing our risk. Yes, it's a perfect opportunity to get short on a green day in a name that looks to be capitulating. As of pre-market here, trading 35.53, so we should be green just in the very second day. We closed green end of day since we opened these at the beginning of the session yesterday, but we should be deep green now. Somewhere near 50, 60, 70, 80%, depending on where the market wants to take this off of the open. Let's go ahead and look at the actual play on the chain to show you guys. We grabbed the $30 puts for a 0.26 delta, 53.2 IV, the July 21st, 2023, with an IV rank of 32.8. This is cheap enough and a low enough IV for us to just want to go and grab the puts. We do not need to spread this. We do not need to worry about IV contraction. As a matter of fact, IV is probably going to expand and push the premium on our contracts even higher. So not only are we going to get the direction right, hopefully, but we're going to get the IV expansion to push our premiums even further. And that's what we're looking for, right? So we're looking at the $25 price target, which is that 2020 high. And if we grab the $30 puts, that's going to put us firmly in the money. We have 128 days. If it gets down there, I should say firmly in the money. We have 128 days to get there. We want time on this because we don't expect just a pure capitulation. We don't. It's just, you know, these things take time. We've shorted energy in the past, and we very rarely just get flushes down towards price targets, specifically when we're looking for a price target of, you know, 20%, if I'm not mistaken here. Nearly 40%. Probably not going to get a 40% move in a single session or even a single week. So we want time on our side. We can go ahead and look at the analysis portion, the analysis portion of this and see where exactly we are. Currently trading right now 36, 37 bucks, and we're looking for anything sub 30. Now, if we get down towards that 25 area, this contract is going to be worth multiple hundreds of percent. As always, we want to take half off at 100% to make this trade free and continue to ride this down as long as the trend is still in our favor to the downside. Now, there are other energy names that are set up like OVV. We just liked OVV the best. The TA, in my point of view, my perspective, that 30 to 40% potential drop down gives us plenty of runway here for us to capture in those puts. We have a lower volume zone all the way down towards the $25 area. So this is more of like a perfect storm sort of situation, kind of like with energy in general. We like this setup. There are others like this, so I encourage you to go and scan through XLE. If you'd like to take a short, find names that are breaking down from risk on levels. Don't just buy things that are down because they're down, right? You want to have a spot on the chart that says, shit, I'm wrong. Where am I wrong on this? And these horizontal level breakdowns give us that. If we start trading above 41, we're going to be wrong. We're going to look to close these things, right? But as of right now, it doesn't look like that's going to happen. So guys, here's the sales pitch. If you like this type of analysis, these types of trades, right? We typically sit in trades for days or weeks. In this case, it could potentially be months. I have no idea. But this is how we operate. The entire TTI trading system is based around guys that work 9 to 5s. They don't have the time to day trade or simply don't want to obsess over every single candlestick on a 1-minute time frame. We look to capture trades that take days, weeks, or potentially months to play out, and we've done a very, very good job doing that. We've lasted 3 years building out this system, and it has helped hundreds of traders be able to find their groove in the market without having to hide in the bathroom at work to trade market opens or take away from family time on your precious afternoons if you're able to pull away from work for a little bit instead of spending time with your kids. You're obsessed over charts because you want to trade the close. No, we don't do that stuff, right? So if you want to figure out how we're able to do this, the information is below. Click the link, go through all of the material. You'll see if you're a right fit or not. And also, if you don't already like, subscribe, comment below. Let me know if you like this type of stuff. I'll continue to make it. I appreciate it. It definitely supports me and motivates me to continue to do this stuff like this. And I hope you enjoyed the video. I'll catch you in the next one.